Hey gang, Dennis Tubbergen here with another video economic update. Today is Thursday, March the 15th, 2018, and I want to talk to you today about cryptocurrencies. I have a news story from CNBC on the screen today titled "Over 60 billion wiped off the value of cryptocurrencies in 24 hours as Bitcoin slide continues." Well, we've been talking a bit about cryptocurrencies on and off. In fact, in November, so that's approaching like 5 months ago now, I wrote a report on cryptocurrencies, and in that report, I stated that I believe there was no chance that cryptocurrencies would become the new gold standard of currencies. So this news story that Bitcoin price collapsed as well as other cryptocurrencies didn't surprise me. Now, admittedly, the what is a lot easier to predict than the when, but I was going to give you just a little bit from that report and then show you some price charts today. There's several reasons that I believe that cryptocurrencies are maybe a precursor to a different type of currency, but in their current form, I believe there's no chance they will become the new gold standard of currencies because, number one, cryptocurrencies don't solve the problems we already have with fiat currencies. Cryptocurrencies on a very fundamental level are just another fiat currency. They're not issued by a government or a central bank, but they're also not backed by anything tangible like gold, silver, land, or industrial goods. Now, the advantage they have over government-issued fiat currencies is that there is a limit on the amount of a cryptocurrency that can be created. Now, when you think about it, and I asked this question in the report and say, think about this point deeply. What makes a Bitcoin that was exchangeable for nothing in 2010 when it was valued at 0.8% exchangeable in late 2017 for something that was worth $7,000? 7 years prior to that point, 4 Bitcoin wouldn't buy a piece of bubble gum, and now 4 Bitcoin would get you a new car. And that's still the case today, although Bitcoin's gone from 7,000 to nearly 20,000, back down to about where it was in November. So it's a classic bubble pattern, which is something that I had predicted in the report as well. The second reason that I had outlined in the report that cryptocurrencies would not become the new gold standard of currencies is that cryptocurrencies have simply become too speculative to be used as everyday currency. Currency that's used to buy and sell things needs to have a very important characteristic. It needs to be stable. If you're selling something to someone, you want to make sure the form of payment you receive has value that is relatively stable. Cryptocurrencies are simply too volatile to be used as currency every day. And the price chart that you see in the report in front of you is the Bitcoin price chart as of November of 17 when I wrote the report. Now let me show you the current Bitcoin price chart here. You can see that here's where we were when I wrote the report. And in the report, I said that I thought it was a bubble, and I'll share that with you in just a minute. And look what's happened to Bitcoin. It's gone up, almost straight up. We call that a parabolic price pattern, and it's come back down almost to where it was when I wrote the report. So Bitcoin's gone for quite a ride here over the last 5 months. It's gone from about 7,000 up to almost 20,000, now back to somewhere north of 8,000. This is classic bubble chart pattern. Bubbles take just about as long to unwind as they do to build up. That's pretty close, and they're always pretty much symmetrical. That's the case here with Bitcoin as well. Now, if I go back to the chart, I point out that Bitcoin experienced a 1-year price increase of about 1,000%. It pointed out that was bubble territory. I also said in the report, I'm not saying that bubble can't go higher. It could, and pointed out there's an old, very true market axiom that says the market can stay irrational longer than you can stay solvent. However, when you take a look at the Tulip Mania price chart from the 1600s, it looks a lot like the Bitcoin price chart that we just saw. If you take a look at the NASDAQ composite price chart, I'll page back up here a second, from the tech stock crash, it looks a lot like Bitcoin. It looks a lot like the tulip bubble. We've got the South Sea bubble in the early 1700s, and you see we have that same type of chart pattern. When you see that chart pattern, I've never seen one that didn't turn out to be symmetrical and didn't turn out to go down just as hard as it went up. I believe that's the case for cryptocurrencies and Bitcoin. I am not a buyer here. I think that there's more downside to go. That's today's video economic update.